Welcome back to our channel. Today, we're diving into a topic that affects nearly every working American: Social Security and Medicare taxes. Whether you're an employee or self-employed, these taxes can take a significant bite out of your income. But don't worry, we've got smart solutions to help you decrease those tax liabilities legally. If you're interested in keeping more of your hard-earned money, stick around till the end of the video. Let's start by understanding just how much you might be paying in Social Security and Medicare taxes. If you're an employee, your wages are hit with a 12.4% Social Security tax, but luckily you only see half of that, 6.2%, coming out of your paycheck because your employer pays the other half. For 2024, the wage ceiling is set at $168,600. That means at most, you could be paying $2,906 in Social Security taxes alone. But if you're self-employed, things can be even tougher. You're responsible for both the employee and employer portions, making it a full 12.4% hit on your income up to the same ceiling. And don't forget the 2.9% Medicare tax, which continues indefinitely beyond that ceiling. If your net self-employment income is $168,600 or more, you're looking at paying a whopping $25,808 in combined Social Security and Medicare taxes. Ouch! Now here's where it gets worse. The Social Security tax ceiling is expected to rise year after year due to inflation adjustments. By 2033, it could be as high as $240,000 to $700, meaning your Social Security tax hit could reach over $30,000 annually. And that's just Social Security. Medicare taxes continue on indefinitely. So, what can you do to lessen this burden? One of the best strategies for self-employed individuals is to operate your business as an S corporation rather than as a sole proprietorship or partnership. Here's why. As an S corporation shareholder employee, only the wages you pay yourself are subject to federal employment taxes. The remaining income can be distributed as tax-free dividends. For example, if you earn $250,000 in 2024 and pay yourself a reasonable salary of $80,000, you'll only owe federal employment taxes on that $80,000. The rest can be distributed to you without any additional Social Security or Medicare taxes. This could save you thousands of dollars annually. Just make sure that your salary is reasonable in the eyes of the IRS to avoid any penalties. The key here is documentation. Keep records showing how you determined your salary amount. Now, if you and your spouse run a business together in a community property state, you have another tax-saving opportunity. According to IRS Revenue Procedure 2002-69, you can choose to treat your business as either a sole proprietorship or a partnership for tax purposes. Why does this matter? Well, let's say your business earns $250,000. If you treat it as a sole proprietorship, the entire amount is subject to self-employment taxes. But if you treat it as a partnership, you can split the income between you and your spouse, potentially lowering your overall tax liability. For instance, if your spouse's income from another job already exceeds the Social Security wage base, any additional business income allocated to them would only be subject to Medicare tax at 2.9%, not the full 15.3%. This can result in significant tax savings. While these strategies are perfectly legal, it's essential to be aware of the IRS's potential scrutiny. If the IRS suspects that you're paying yourself too low of a salary to avoid employment taxes, they can reclassify your dividend payments as wages, which would make them subject to employment taxes. Although the audit rates for S corporations are currently low, it's still wise to be prepared with solid documentation. Similarly, if you're in a community property state, make sure you're consistent in how you classify your business. Switching back and forth between classifications could raise red flags and lead to penalties. So there you have it. Some smart IRS-approved strategies to help you decrease your Social Security and Medicare tax burden. If you found this video helpful, please give it a thumbs up and share it with others who might benefit. Don't forget to subscribe to our channel for more tips on keeping more of what you earn. Thanks for watching, and we'll see you in the next video.